Welcome to another 21 Hats Dashboard. Every Monday, Gene Marks and I talk about the issues we think business owners should be following. Welcome, Gene.
Happy New Year, Loren.
Happy New Year, Gene. Great to be back here with you. I want to start with a story you wrote this week about a topic that everybody's thinking about, and that's inflation. You wrote a piece with some suggestions for what business owners can do to try to protect their business from inflation right now. Talk us through that a little bit.
Yeah, let me rattle off a few ideas. First of all, we all know it's going to be an inflationary year. It is. We know that. We also know, if you ask any business owner, Loren, whether or not they expect interest rates to go up this year, you won't find anybody who doesn't think interest rates are going up this year, particularly because the Fed has already announced that they're going to be raising interest rates this year. So we know there's going to be higher prices in 2022. We know there's going to be higher interest rates in 2022. I'm telling you this now. So we should be doing stuff, right? And my smartest clients are doing stuff. So let me tell you what my clients are doing. I mean, number one is, whereas it made no difference whether or not we kept our money in an interest-bearing checking account or not in the past, who cared? Because interest rates are at 0%. They're going to be going up this year. So now it makes sense.
To 1%?
1%, 2%, whatever it might be. 3% is actually the Fed's targeting 3%.
It's something.
It's now time to have that money market account, certificate deposit, interest-bearing account, sweep it in there, and you will to start gaining a few dollars on it. It'll start making more sense than it ever has. You want to pay down your debt, right? I mean, if you know interest rates are going up, credit card rates will certainly go up along with that. And in addition, you will also see interest rates. Business loan rates right now are anywhere from 3 to 7%. You want to fix that. So a good option that I see a lot of clients turning to is the Small Business Administrations. You go to an SBA lender, and the SBA Section 7A loans, you can actually refinance your existing debt and have the ability to fix a rate for a number of years. That will protect you against interest rate increases. I got a bunch of clients, Loren, that are buying inventory, buying property, buying equipment, because that makes sense in an inflationary period. I've got clients, of course, that are investing in technology. The only final thing I'll mention on this—
You're saying it makes sense, Gene, because you want to buy it now before the prices go up?
Exactly right. I mean, they're property and assets themselves tend to keep up with inflation. Buying inventory, if you're an inventory-driven business, you know what to do with it, so buy it now. My clients are scrapping up whatever they can, scoop up inventory, because they know the prices are going to go up in 2022, and buy low and sell high. The final thing is there's something called TIPS. If you're looking for investments, they're called Treasury Inflation Protected Securities. You can ask your financial advisor about it, but they're kind of like your typical Treasury bonds. They're backed by the U.S. government, but they come with certain protections against inflation. So talk to a financial advisor about TIPS. Move money into equities, because again, the big companies themselves they know what to do to manage their profits and keep up even in an inflationary world. And that should hopefully keep your pace as well. Those are all just different things.
Actually, Gene, you had one other in there that I thought was smart and noteworthy, which is you talked about why this is a good time to look at your own prices and think about raising them where appropriate. But you advised against just a knee-jerk across-the-board price rise and suggested that people focus on places where their margins are thinnest.
Yeah, that's correct. I mean, you can increase prices, but don't be lazy about it, because you're going to lose customers. You're just going to, we're going to have a 10% price increase. Most of my clients are, they're looking at their customer bases. They're looking at the margins of the products they're selling their biggest customers. And they're selectively choosing where they're raising prices. Because why raise prices on something that is just going to upset a customer if your margins are already acceptable? So focus on just the margins and the customers where you think that it's really important to do from a profitability standpoint, and be careful, when you're raising your prices. But by all means, raise them if you need to, because that's what everybody is doing.
All right. Second, I wanted to ask you about a story that the New York Times ran this week about the Qualified Small Business Stock, or QSBS exemption. It's a tax break that's designed to help small businesses, to help entrepreneurs, to give them a way to raise money more easily. There is widespread concern that this is being taken advantage of, being exploited, and that it's not serving its main purpose of helping business owners and entrepreneurs. I want to call upon your CPA expertise. What do you think?
I could not disagree more, and I'll tell you the reason why. This is called Section 1202 stock. It's been around for a while, and you and I, Loren, we can invest in a startup business. They need to be a C corporation. They have to have less than 50 million in assets. They need to be in like manufacturing, retail, wholesale. They can't be a service business. They can be technology business. You and I can invest in a company like that, be like the first investors. If we hold on to the stock for more than 5 years and the stock gains, whatever the gain in value is when we eventually sell it, we won't have to pay any taxes. It's a pretty big incentive.
To a large extent, I think it allows early investors to avoid taxes on at least $10 million in profits.
Yeah, it does. So what it does, though, I know you've got this concern that like, oh, well, this can be passed on to future relatives or generations or assigned to other people.
Well, explain that. You can give this tax break to your uncle and your aunt and your kid.
You can transfer over this stock and then they get that same tax break.
Even though they didn't put any money in.
They didn't put any money in, but you put the money in. So yes, I mean, I realize that that's sort of gaming the system because you're taking this tax break and moving it on to other people. I couldn't give a shit. I mean, if they have already invested money in my company, if I'm a startup and they invested $10 million, then the startup benefits from that. Whatever you're doing with your stock, and you go ahead and do with your stock in your tax situation. The whole point of this legislation is to give some type of incentive for investors to invest in small businesses and startups. That's exactly what it does. It's just that the New York Times wants to politicize it into like, oh, it's the rich versus the poor, and look how they take advantage.
Well, I will say, this maneuver has been given a nickname. They call it peanut buttering, and the Times didn't come up with that name. They reported it. They didn't come up with it. And it's a reference to how easy it is to spread the tax break around. You can peanut butter to a bunch of other people.
Good for them. Good for them. I mean, again, you asked when you introduced this topic is this good for small business?
Right.
So I'll get back and answer your question. Yeah, because the original business got their $10 million or whatever the investment was. Whatever these guys are doing with peanut butter, jelly, bananas, bread, I couldn't care less. It's going into the business, and that's I think it's serving the purpose of it. Now, if they want to tighten up, if the government wants to tighten up the rules about transferring the money, or transferring the assets to family and friends or whatever, fine, go ahead and knock yourself out. But as far as a small business is concerned, I would not want to see this Section 1202 stock break go away. And in fact, I would hope that more awareness is created because of the New York Times article that could attract more investors for small businesses.
Fair enough. Last story I want to discuss with you, it's one that I find a little scary, I must admit. The headline on it is the biggest small business story of 2021.
It is.
You wrote it, and what you're talking about are NFTs and cryptocurrency and the blockchain, and it scares me because it makes me think I might actually have to figure out what this stuff is.
So it all starts with the blockchain, and just to give a very easy explanation of the blockchain, because I'm an accountant, the blockchain is a parallel universe next to the internet that consider it to be a ledger. And in this ledger is every transaction that's ever made that has got to be verified by a bunch of different sources. And once that's done, that transaction is locked in, can't change, because to change it, you would have to get the buy-in from a bunch of different places to change this transaction. That's the blockchain. Once it's in there, it's in there. It's like the perfect audit trail of transactions.
Permanent record.
It's a permanent record, okay? Now, there has been this explosion this year. It's really come to market. I mean, the crypto business, digital currencies, $3 trillion market. The venture funding is now at $30 billion into blockchain-based companies and organizations this year, which is like quadruple the amount from 2018, which was the biggest year of investments. It's taken off. And the best example that I gave was, and if you're listening to this, think of this opportunity for yourself. Go on Google and Google Google Bored Ape Yacht Club. And if you go to the Bored Ape Yacht Club, you'll find like a bunch of graphic cartoons and artwork, drawings done basically of bored apes. And you can buy one of those drawings. And each one of those drawings, because they're on the blockchain, they've been connected to the blockchain by a token, which is a unique identifier for that drawing. You can't be broken. It is uniquely with that drawing. It's like an artist signing the drawing. You can buy one of those Bored Ape drawings from anywhere from $400 to millions of dollars. That's how much these things are.
Why do I want a drawing of a bored ape?
Why do you want any kind of an art, right? I mean, I don't have any art I have a picture in my office of Tony Soprano with that horse. Do you remember that Paulie Walnuts gave him in one of the later seasons? My daughter gave me that.
That was killed.
Yeah, that was killed. That's right. There's a picture of Tony Brown wearing a Napoleon hat. I have that painting in my office. Of course, it's a rendition. That's my understanding of art. However, think about it this way: there is obviously a multi-billion-dollar industry worldwide for artwork, right? You are an artist. You're a craftsperson. You design. You do a video. You do a photo. You do any kind of painting or drawing, that kind of thing. You're starving. Instead, you go to any one of the online marketplaces like Bored Ape, and you put your digital art up for sale, and somebody buys it. Now, why would somebody buy your digital art when you can just, make a copy of it or click on it or whatever? Because it's the same thing with any art. People look for original art. I mean, you can make you can have a copy of the Mona Lisa hanging in your office, but it's not the original Mona Lisa. Your copy is worth nothing, but the original has the value. It's the same thing with any kind of digital art. So now you've got thousands, tens of thousands of new entrepreneurs that are going and creating their own artwork, their own products. You've got Quentin Tarantino that is taking, images from Pulp Fiction and digitizing them and then selling them as a unique thing that you can own. And people that buy collectibles, that's what they buy.
Let me ask you this. Isn't there a bigger difference between a copy of the Mona Lisa and the Mona Lisa than there is between a regular link to a piece of art and the digital original?
You and I are such Luddites. I mean, when was the last time you were in an art gallery? Never, right?
Wait, it was before COVID. Yes, I've been in art galleries.
I mean, you walk into an art gallery and you're like, what the hell? This painting is selling for $5,000? Who is going to, right?
But you're not answering my question. Isn't there a bigger difference between the copy of the Mona Lisa and the Mona Lisa than there is between two digital representations of a work of art?
No, I mean, I think if you have a digital representation that's a unique piece of art, that will have more value to a buyer, a collector, than a copy of it, a screen grab of it, or a link to it. Do you follow?
All right, maybe. All right, let me ask you this then. I'll give you that one.
I have another example, and I just want to make sure that I also make this clear.
Go ahead, please.
You and I talked about this before in previous conversations about the metaverse, right? Which is also coming.
Yes.
Which is the big world, our whole world's turning into a video game. So think about this, as companies right now are starting to buy real estate in this digital universe. You and I will have this conversation some years from now in a virtual, conference room that, where we will be sitting across from each other. Our avatars will be doing our thing. Many brands will be doing this as well. That's how they'll be conducting business in the metaverse. It's coming. Well, say, Loren, say you were an art appreciator. Well, in that virtual conference room, don't you want, your own artwork in your conference room?
I don't want a virtual conference room.
Many people will, dude. Many people will. Which brings me to my last...
Yeah, I heard that about Second Life about 15 or 20 years ago.
It brings me to my last point. And the point is this. You and I are too freaking old to get it.
I'll buy that.
Yeah. This is something right now that younger generations are doing. It is Gen X
let me stop
that
you.
Are buying this stuff.
I hear you. I get it. I know I'm old. I know that this is real. I know that the money is real. Here's what surprised me about your story. You call it the biggest small business story of the year. That suggests that it's more than just artists putting their work up for sale, that there's something bigger going on here. What's the something bigger?
It's not just the artists. What it is all of the indirect small businesses that are impacted by the explosion in this type of technology. You have all of the infrastructure firms that are building the infrastructure to support the metaverse, Bitcoin, digital currencies, as well as NFTs. You've got marketplaces. I mentioned Bored Ape as a marketplace. There are hundreds of marketplaces. OpenSea, who you probably have never heard of, is an online NFT marketplace that just raised, I forget how much money just this past week in a round of venture capital funding. You have financial advisors, you have consultants, you have software developers. All of these people are involved in digital currency, crypto, blockchain, NFT, all related together. These are entrepreneurs, Loren. These are all people that are either working independently or building companies around this whole new tidal wave of opportunities of products and services to sell. That's why I think it's an enormous story, because it just took off this year. It's really coming into, its own this year, and we're going to see a lot more of it over the next few years.
Let me ask you a question that I think makes an important distinction. Are you saying that it's time for somebody who owns a traditional business like you and your business? Do you are you figuring this out because you see opportunities for you here? Or is this still just for people who are diving in and doing something intrinsic to NFTs, blockchain, crypto?
If you're running an existing business, unless you're considering accepting digital currency, which I don't recommend right now because of its volatility, it really has no impact on you. But it is the same type of thing as who knew? I mean, think about all the people that have made so much money off of YouTube when YouTube didn't exist 15 years ago. Whenever any new technology comes along, any new platform that we've never heard of, it spawns a new generation of entrepreneurs and wealth. And that's exactly what blockchain is doing right now. A whole new generation. The kids right now that are Gen Zers and the generation before them, they are going to be buying and selling digital stuff, living in the metaverse. They're going to be investing money, and they're going to be looking at ads there as well. And there is a whole new industry of companies that are going to be serving that generation of consumers. And that's what we can look forward to over the next 10, 15 years.
Did you buy Bitcoin early on?
No, I'm not an investor in Bitcoin because I'm too conservative. It's really volatile, and I can't. I can't. Just so you know, the cryptocurrencies that are out there. There's like Bitcoin, Ethereum. There's Dogecoin. There's a bunch of others. They have technical issues that they have to resolve, and they have they have volatility issues that need to be resolved.
Do you own an NFT?
I do not own an NFT as well, but then again, I own a picture of Tony Soprano. I don't own any art. It's wasted on me. So it's not something I'm buying, but it's so what? I'm not a YouTube influencer either. I'm not buying.
Well, the difference is you don't have to do anything. You can just buy it as opposed to making a living on it. Interesting. One of the things that stops me with this is, you probably know about this, a tech reporter for the New York Times, I don't know, 6 months ago, something like that, wrote a story explaining what NFTs are and how they were becoming hot. And then he turned his story into an NFT and put it up for auction. And it sold for $500,000, if I remember correctly. Are you telling me that price is going to hold up?
Well, he sold it. So I don't know if that price is going to hold
once,
up.
Yeah.
Well, think about it. I mean, it is.
I can't think about it.
It is from the original author, certified, tokenized, uniquely identified as the article about NFTs at the very cusp of the NFT revolution, as it is. I don't know if revolution, but what collector wouldn't pay for that 20 years from now? I don't know. I mean, collectors buy old newspapers on the day of Pearl Harbor or historical events. So, yeah, I mean, it could serve.
Can we turn this podcast into an NFT?
Frankly, yes. We could take this recording of this podcast and tokenize it with a unique identifier, and some lucky person can buy this from you, Loren. They own the.
I'll split the $500,000 with you, Gene.
They own the conversation, and it doesn't mean somebody can't re-record it or listen to it and make another recording, but there is value in having something that's unique, and so that's what it is.
As you can tell, Gene Marks is a CPA. He writes weekly on small business for The Guardian, The Hill, The Philadelphia Inquirer, The Washington Times, Forbes, and Entrepreneur. You can also hear him on ABC Radio's Eye on the World with John Batchelor. Gene hosts 2 popular small business podcasts with Paychex Corporation and The Hartford. Thank you, Gene.
Loren, thank you. I hope I persuaded you.
I'm about to go make some investments.
So yeah, well, take this stuff a little bit more seriously, please. Anyway, I look forward to talking with you next week.
Have a great week, everyone.